Welcome to This Explainer. Today, we're building the ultimate blueprint for corporate health, drawing straight from the foundations of the CIA exam. You know, in a world where a single compliance failure or a data breach can literally cost a company millions overnight, understanding the structures that keep modern businesses secure isn't just textbook theory. It's about pure survival. We're going to dive deep into how a comprehensive framework ensures an organization actually meets its strategic objectives.
So think about it for a second. Who really protects a company from the inside? When we think of corporate security, we usually picture cybersecurity firewalls or maybe strict external regulators knocking on the door. But who is actually diagnosing risks and protecting assets from within? Well, it's a highly specialized, independent function that essentially acts as the organization's immune system. Just like white blood cells constantly scanning your body for threats, these professionals are tirelessly working behind the scenes, identifying vulnerabilities way before they become full-blown corporate diseases. Here's our roadmap for today. First, we'll cover the foundations of internal auditing, then move to the Internal Audit Charter, unpack the 3 lines model, and navigate assurance services. After that, we'll look at control self-assessments and finish up with third-party and privacy audits. It's a lot of ground, so let's jump right in. All right, Section 1, Foundations of Internal Auditing. Let's look at this first crucial building block. The source material defines internal auditing as an independent, objective assurance and advisory service designed to add value and improve an organization's operations. Now, there's a common misconception out there that auditors just point out flaws, act like the corporate police, and slap wrists. But in reality, they bring a systematic, disciplined approach to actually improve governance and risk management. They exist to proactively add value. Think about an auditor digging into vendor contracts and finding a redundant software subscription across 5 different departments. Consolidating that could save the company $1 million a year. That is exactly what adding value looks like. Moving to Section 2, the Internal Audit Charter. Let's see how this function actually gets its official mandate and authority. To do their job effectively and act as that true immune system, auditors need a very specific setup: dual reporting. The Chief Audit Executive, or CAE, lives in this unique tension. For true authority and independence, they report directly to the highest level, the Board of Directors. That guarantees unrestricted access to all activities, records, and personnel. But for daily administrative stuff like managing budgets, approving vacation time, or handling HR, they report to senior management. It makes total sense, right? You need someone to sign your paycheck, but you absolutely cannot rely on management for your audit authority, because one day, you might just have to audit them. And that dual reporting structure protects one sacred, absolutely crucial concept in the profession: independence. This means complete freedom from any conditions that could introduce bias or interfere with an objective assessment. I mean, imagine being asked to review the travel expenses of your best friend in accounting, or trying to audit a workflow you designed yourself 3 years ago. It's just human nature. It is almost impossible to be entirely objective in those situations. The thing is, independence is incredibly fragile. It can easily be impaired, and understanding how that happens is critical. Imagine you're a committed auditor ready to investigate a major supply chain inefficiency, only to find a defensive manager has deliberately slashed your budget, completely cutting off your resources, or what if they outright restrict your access to key personnel? If you lack direct communication with the board to report these roadblocks, your independence is officially impaired. When the immune system is suppressed like that, the entire blueprint for organizational health starts to crack. On to Section 3, the 3 lines model. Get ready, because this is a major aha moment for understanding organizational architecture. The IAA's 3 lines model brilliantly illustrates how governance and risk management are systematically structured within a healthy organization. It's not just a rigid corporate hierarchy. Instead, it's a continuous flow of alignment, communication, and oversight between the governing body, management, and internal audit. Everyone has a distinct role in protecting assets, and these roles have to interlock perfectly to create and protect corporate value. Let's put this model into action with a relatable example, like a large retail store chain. The first line is management. Those are your store managers running daily operations and actively handling frontline risks, like daily theft or inventory loss. The second line is oversight. These are your corporate compliance and risk management teams at headquarters, providing support and writing the actual security policies. And the third line, that's internal audit, flying in completely independently to provide objective assurance to the board that the store managers and the compliance teams are actually doing their jobs effectively. Section 4, navigating assurance services. Let's look at the actual toolkit auditors use in that third line. Auditors provide different types of assurance to evaluate the organization. Let's translate the audit jargon for a second. Compliance assurance is exactly what it sounds like, checking that the company is adhering to strict laws, regulations, and contracts. Operational assurance evaluates actual efficiency, like are we wasting money on the assembly line? And finally, IT assurance tests the integrity of technology and data. In our modern digital age, this might be the most critical piece of the puzzle. Just think about the devastating operational and financial costs of a massive ransomware attack, wiping out a company's database.
To provide that level of assurance, auditors evaluate the control process, which follows 4 continuous steps. Imagine setting a standard for employee travel expenses. Step 1 is establishing the standard. Let's say a maximum of $200 a night for a hotel. Step 2 is measuring actual performance, looking at the expense reports coming in. Step 3 is analyzing deviations, asking, why did someone spend $500 in Chicago? And finally, step 4 is taking corrective action, like updating the booking software to hard block those expensive rooms. This continuous loop ensures the organization is always learning and correcting.
Section 5. Control self-assessments. The big takeaway here is that auditing isn't done in a vacuum, so let's check out some collaborative methods.
This brings us to the Control Self-Assessment, or CSA. Instead of an auditor just showing up with a clipboard playing strict hall monitor, a CSA empowers the frontline employees to actively evaluate their own risks. After all, the folks working on a factory floor or processing the daily invoices know the granular risks of their jobs better than anyone else. Plus, there is a massive psychological benefit here. When employees assess their own risks, they take true ownership of the solutions. They become active participants in organizational health, rather than feeling like they're constantly being policed.
Section 6. Third-party and privacy audits. Let's look at how auditors evaluate outward-facing risks and specialized domains. Modern businesses don't operate on an island. They rely heavily on external partners. Third-party audits ensure that these external relationships, whether they're outsourced IT or supply chain vendors, actually provide more benefits than drawbacks. Auditors dig deeply into these contracts to uncover missed revenue or verify service levels. But more importantly, they ensure external partners aren't creating a fatal vulnerability. A supply chain vendor with poor network security can literally become a digital backdoor straight into your highly sensitive internal network. And speaking of incredibly sensitive data, privacy auditing is absolutely critical today. These audits verify the rigorous protection of personal information. We all know buzzwords like GDPR or CCPA. Falling short on data privacy doesn't just mean a slap on the wrist anymore. It's highly regulated law. A failure here can lead to massive financial penalties, staggering legal liabilities, and a devastating, sometimes unrecoverable, loss of the organization's reputation. Section 7. The ultimate threat. Let's conclude this explainer by looking at the biggest threat to this entire structural blueprint.
Even if a company looks incredibly healthy on the surface, perfect 3 lines of defense, rigorous collaborative assessments, top-tier IT security, human nature introduces a wild card. This brings us to the fraud triangle. It's a fundamental model every single auditor relies on when assessing risk. It perfectly illustrates the 3 hidden characteristics that must be present for occupational fraud to actually occur.
Let's frame this as a story of a seemingly reliable employee who ends up going rogue. First, you have pressure, or motivation. Let's say this employee has quietly accumulated a massive personal gambling debt. Next, you have opportunity. The employee notices the accounting safe is routinely left unlocked on Friday afternoons because of weak internal controls. And third is rationalization. The employee convinces themselves they aren't actually stealing. They're just borrowing the money for a weekend bet and will put it back on Monday. Together, these 3 invisible elements drive actions that can destroy an organization from the inside out. When opportunity, rationalization, and pressure converge, it creates a perfect storm. The risk of fraud absolutely skyrockets. Now, here is the critical takeaway for any management team. You usually cannot control an employee's personal hidden pressures, and you definitely can't control the mental gymnastics of their rationalization. So what do? You have to focus all your energy on constantly monitoring and strengthening internal controls to completely eliminate the opportunity. You've got to make sure that safe is locked every single Friday. Which brings us to our final thought. We've explored the foundational framework, the 3 lines model, the vast toolkit of assurance services, and the ever-present human threat of fraud. Internal audit is really the bedrock of corporate stability. It ensures that an organization doesn't just survive,
but actively meets its strategic objectives through strict independence and a culture of continuous improvement across every single line of defense. So looking at the structures, the guardrails, and the people around you today, is your organization's blueprint strong enough to withstand the pressure? Thanks for joining this explainer, and keep learning.